VAT rates. VAT works along a number of different rates that are applied on various different transactions.
Those things that do not have VAT applied or do not fall within the scope of VAT are regarded as outside the scope of VAT transactions. Examples being salaries, bonuses, depreciation, statutory fees, donations. These things are regarded as being outside the scope of VAT and therefore VAT is not applicable. For those transactions or supplies which are within the scope, then the VAT legislation is now relevant. The GCC VAT framework has set the VAT rates that need to be in operation by the various GCC member states. The standard rate has been set at 5%, and this is the default VAT rate. Other than that, we have what's called exempt from VAT as well. This essentially is a transaction which has 0% VAT but has the associated input tax restricted. Another set at 0% is the zero rate, which again has 0% VAT chargeable on a transaction. However, the difference being with exempt is that VAT associated with the transaction can be recovered as input tax. The various forms of legislation specifies those things which can be either falling under the category of exempt from VAT or zero rated of VAT. However, where the law is silent on any of those two things, that is not exempt or zero rated or even outside the scope, then the default rate shall be applied, which is at 5%. So the first thing one shall do is check, does my transaction fall under the exempt category? For example, is it passenger transport related? Is it related to residential buildings, or is it banking and insurance related, because therefore it would be exempt? If not, could it be a zero rated transaction? Is it related to education or medicine or the healthcare industry, or is it to do with gold? If again the transaction does not fall under any of those categories and the law has specifically not specified it being under those categories or outside the scope, then the default rule will be applied, the default standard rate of 5%. And for examples, this should include things such as the food industry, which will be chargeable at 5%, catering services, the sales of mobile phones, again 5%, accountancy, professional fees, chargeable again at 5%, petrol 5%. The law would not specify these individual categories or individual supplies within those categories, but as we know they are not mentioned in any of the other categories, therefore the standard or the default rate of 5% shall apply on those transactions. So where businesses are making supplies of that nature, 5% VAT will be due.
So what are the consequences of these different types of supplies? First, we have the standard rated supplies, which is those supplies which are charged at VAT rate of 5%. Unless otherwise stated, all supplies of goods and services are levied with the standard rate. From an input tax perspective, in other words, the input tax attributable towards standard rated supplies is deductible or recoverable. Zero rated supplies. This is where VAT is charged at 0%, a zero rate. It is, however, limited to a number of supplies, which is specifically mentioned within the VAT Federal Decree Law. Similar to the standard rated supplies, the input tax attributable towards zero rated supplies is recoverable. Exempt supplies. These are supplies where VAT is not charged. VAT is not charged on these transactions, and it is limited to a number of categories. The distinction between the exempt and zero rated is that although VAT is not charged, there is a difference in the VAT recoverability associated with the transaction. Where there is input tax attributable towards exempt supplies, the input tax Transactions is not recoverable. outside the scope of In VAT. other words, it will be an absolute Here are cost some examples towards the of business those transactions that are and disregarded not for deductible VAT on its purposes. VAT return. In other words, these transactions are not zero rated, exempt supplies, or mainly standard concerned rated. The financial services industry. These include things as well such as real estate, accounting adjustments, depreciation, amortization, unrealized gains or losses, wages and salaries, allowances, bonuses, and zakat payments, goods where supplies are made to outside the GCC, payments of statutory fees, charges to the federal or state governments or local authorities, such as municipality fees, and charitable donations and fundraising. All of these are disregarded for VAT purposes and would not need to be reported on a VAT return.